Today is part 3 of making a micro business case study. And today we're going to look at the accounting side of the micro business. Hi, I'm Laura Vandenherk, and I work with individuals and businesses from startups to 100 million. And in developed countries, there are saturated markets and pressures to operate sustainably. So today we're going to look at the accounting side of things to this micro business. Angus has never done anything like this before. He's never started up a business. He's never done the accounting for business. He has completed first year of his business studies from Brock University. He has a familiarity of kind of what's going on. He's not a complete greenhorn, but he hasn't done it himself. So I want to make sure that we have the processes in place for him, that if he wants to change in any way that suits how he does things and how he thinks, he can more than do that. So this is the basis that I'm going to give Angus. And I'm going to start with operating revenue. I always start with revenue when I'm with any of my clients, because I always want to make sure that all the revenue coming into a business, no matter how small or big, is exact and it's complete, and everything about the revenue. Does it charge HST? We're in Niagara Region, Ontario, Canada. HST is 13%. The threshold is $30,000. And if you go over $30,000 in your revenue, you owe HST for that $30,000, even if it's after you collected it. And going back to a handful of customers, maybe you can do that. But in this micro business, he is selling a beverage $8 at a time. So to go back to all those customers and ask them for the HST, he would be most likely on the hook for 30,000 times 13% that he would have to remit to the government. So we want to make sure that Angus is going to hit that threshold. And our forecast numbers are 2,000 drinks from May 1st to August 31st. That's how this business has been designed. It might be over that, it might be less than that, but I know the Niagara region. I know the areas that I'm suggesting that he sell, and I think he can easily sell $16,000 worth of beverages. That's $8 per beverage times 2,000 beverages, or 25 beverages every day for 5 days for a 12 to 13 week period. So I'm sure that he can do that. He'll also be receiving tips. And is he going to get $14,000 worth of tips? Highly unlikely. Will he get up to $20,000? Most probably. This kid is very motivated. He's good at what he does. He's passionate about what he does. And I think he will definitely break the threshold of $20,000. But will he hit 30? I'm going to tell him don't, because his drinks will be less expensive. He doesn't need $30,000. It's nice if he gets it, but he doesn't need it. So do what you need, and maybe close shop for a day. We'll have to see how that goes. So operating revenue, no HST. And I'm not going to suggest to him having a big company software that costs $600 for accounting software. He doesn't need that. He needs a book that he can write in the front of the book and the back of the book. The front of the book will be his revenue, operating revenue, what he gets each day that he works. And in the back of the book, it will be a log of his mileage for business. He'll have a cash box that he'll collect from his patrons, and he will make change from that. And I suggest that he has a calculator on hand to make change, especially when it's not simple change. If somebody hands you a 10 and the drink is $8, $2 change, not a problem. Somebody hands you a 50 and you're in the middle of talking and you're thinking about other things and you're doing at the same time, take a break, use the calculator for 15, 50 minus 24, because maybe you might give out $16 of change. Maybe you might give out $36 of change. It is very simple to make mistakes. and we don't want Angus making any mistakes on the money in or the money that he's exchanging out. And he's also probably going to get tips, and tips need to be included in the operating revenue. So his operating revenue has a book. You have the box. You count the money at the end of the day. We're not separating tips from drinks because that would be too hard to calculate. He could have a tip mug and show people, oh, look, this is what I'm collecting in tips. But he is really good in the bar at getting tips. So we're not going to have that mug to have money out there for anybody to take from. I've been in this industry myself, and the owner used to take money from my tip jar. So not going to do that. It all goes in his box, and it will all be operating revenue. So end of the day, he counts it, $526, puts that May 1st, $526, and then goes to the bank right after and does an ATM deposit if they're not open, or through their customer service reps if they are open, and puts that just plainly in his bank account. He does not need a business account that is called Angus's beverage cart. That's just more money to spend and more fees to pay, and it's not necessary. His business income is going to be put on taxes on a form that is for self-employed people. And it's not separating him out like he's a corporate entity or a sole proprietorship or anything like that. So we're just going to keep this simple, I said. So at the end of the season, after August 31st, he will have his bank activity that he can print out from May 1st to August 31st, and he can write beside everything ABC deposit for every spot he has a deposit. And because he's a student, he's really not going to have any other material monies deposited into his account. And if he does, he can write beside it that those aren't for business. He's going to add that all up. He's going to add his book all up, and they're going to have the same number. And in forecasted numbers, it was $16,000. So let's say he had tips of $2,000 and he's got $18,000, and both place match. Then that activity and the pages from the book go to the accountant at the end of the year or before April 30th to file his taxes. So that's operating revenue, simple as that. Having an envelope maybe with him at the end of the day that he can shove his cash into an envelope and not, walk around with it. But he is going straight to the bank, and those kilometers are going to be business kilometers. And so he'll record that in the back of his book. So operating expenses, what does he do with that? Well, I'm going to suggest what I do with my farm ones, and that is clean out the console between the driver's and the passenger seat in the front. Clean that out. That is a filing cabinet now, and it is for receipts. And he's going to put all his purchase receipts in there. He's not buying any assets. He was lucky enough to borrow a tent, borrow a cooler, borrow weights for the tent, borrow a beverage cart from work. They're actually supporting him in this. And the beverage cart actually has his bar's name on it. And so they thought that would be good advertising. The winery that he's going to, or wineries that he is going to, he's passed that by, he's shown them that, and they don't have an issue with it either. They kind of want to add their own sticker for the winery on that, so it looks kind of like a race car with all the sponsors. So I thought that was a really good idea. So when he makes purchases, he's going to take his receipts, he's going to put them in his car because that's where you usually go. And then if he was on his way to work, he doesn't have to worry about it because that filing cabinet is going to take care of everything because nothing else goes in there. Nothing. You have to find a new place in your car. Use the glove box for what you used to use that thing for. And when he's ready, he can dump them in a bag, dump them in his box, and then take it inside and dump it in the shoe box. This is the accounting shoe box. Nobody in his family is allowed to touch this shoe box. He keeps it in a special spot so no one will. And I don't actually advise that young Angus take care of any of his accounting other than writing in the book in the front and the back and putting his receipts where they need to go. Does he need to open up a spreadsheet program every week and upload it and get it all done? No, it's a waste of his time. It's such a small business. It's better to do everything all at the end. So that's just the way I do them, and I find it easier that way. It's more efficient. Your head's in the game, and you're doing it all at once. So the day that you do your operating revenue is the day you start doing your invoices, your operating expenses. And if you've crumpled them in there, then that's on you, because you have to uncrumple them, make them straight, put a heavy book or something heavy on them to make them flat, and wait a day. And then you can start putting them in a spreadsheet program. And because everything is operating revenue for his drinks, it can go all on one spreadsheet. Doesn't even have to be on order. The only thing he needs to make sure are the dates go from May 1st. And if he bought things before May 1st, then it can go pre-May 1st. But anything he bought after August 31st, that would not count because he was not using. So that's all he has to do is put it in a spreadsheet program. He can take the HST off and then put the HST in a column beside and then have a total for his total operating expense, or he can just put the total on the bottom, whatever he feels he wants to do. I would just put it all in one big thing, one big number, and not take the HST out, because he has not reached that threshold and he is not obligated to register. So it becomes an expense. And we've estimated his expenses will be around $6,000. And having those estimates is actually really good to check back with, how did you do? Well, he had $7,000 worth of expenses. It was higher than what was projected. However, he took my drink suggestions and added some more flair to his beverages, and that was most likely the added cost. And he can go through those receipts and see that in fact it was. So $16,000 minus $7,000 is $9,000 net profit. And we had estimated that he would get $10,000. That's what he needed for school. But he was really happy with the $9,000. He's really happy with how his business turned out. And next year, he can charge a little more. He's thinking of charging $8.50 per drink. That way his tips will go up, because people who spend $8.50 on a drink getting $1.50 back usually give the $1.50 in tips. So he is a sly entrepreneur. One other area that we have not touched on, and that is insurance for this lad. I know that when you're dealing with most businesses, you need some kind of liability insurance. You're dealing with food and drink, not necessarily food, but drink. And what if somebody gets sick? What if somebody fell while you were there? Well, this is what I'm going to suggest to Angus, because this hasn't happened yet. We're talking about it like it has, but it hasn't happened yet. Ask the food truck if he can be put on their rider in order to, I don't know if rider's the right word, but on their insurance as a tailgate, that people are going to his tent, which is by their food truck, or if he has to get his own. And I think liability insurance, 1 million, 2 million, and for just a short span of time. I know for soap you can get it at about $200 or $300. So he is going to have to look into insurance, talk to his winery place, because they have liability insurance, if he can just be noted that he is on site, and they may actually include him at the winery, and he might have to get something for the food truck, because it might only be inside the food truck and what they serve, unless he was passing the drinks to them. And since they were passing the drinks, it was included on their insurance. I don't know. I didn't check. But these are the things that need to be discussed as well, because it is a world of insurance out there, and you seem to need insurance for every single thing you do. So watch your back, call your insurance people, ask them if there's some kind of insurance that you need, or if you are covered under some kind of umbrella from something else. Or because it's a short-term thing, maybe you're not. I don't think that's the case. So young Angus has his operating revenue, costs, his mileage. He's been adding it up. He will tally that at the end of the year and give those pages to the accountant. And insurance, he is going to go through his parents' insurance and see if there is anything that he needs there. And he's probably going to be lucky enough that his parents are going to support him on this one and foot the bill for the insurance. So that's the end of the case study for making a micro business for Angus. If you have any questions or want to continue talking about this, maybe in a different industry or a different business, how it pertains to you, don't hesitate to go to my website, www.nakedacresfarmstead.ca. I am starting free office hours for clients between January 5th and June 30th. And we can Zoom call or phone call and talk about things like this. And sometimes I lose my spot and I don't know what I'm going to say next. Cheers, folks. It was fun going through this scenario with you. And I hope that you know that I have accounting, finance, business, farming, sustainability, and all the different functions of a business, HR, finance, production, operations, inventory, HR, accounts receivable. Like, I'm an accountant, a fraud examiner, and a business student who has been studying businesses inside out for 30 years. So come join me, www.nakedacresfarmstead.ca. Cheers, folks.